a simple tweet. It looks simple. It looks easy, but there's not a lot of thought. It becomes second nature almost eventually. But this is the thought process that went behind this tweet. Right? Always same exact thing. So
but then would you expect it to dig deeper into the fair value gap a second time like we saw?
Again, this goes back to if you remember, I have a tweet that says there's three types of reactions to a key level, right? So when you have a key level, let's use FPG for example, when you have a key level, right? The reactions from this key level can be three things. Whether it's a PD array, whether it's a support level, whatever it is. When you have a key level, the reaction can be one of three things. A V-shaped instant reaction, right? Or it's going to be a W/M shape, right? It's going to be a two-touch, whether it's a turtle soup or failure swing, right? Or turtle soup, even. You see the turtle soup right there. Or it can be multiple reactions to the same. Let me remove this shit. Remove. Or it can be the same. It can be multiple touches to the same level. Now, this one, of course, is the least favorable, right? This one is the least favorable of the three. You don't want to see this. You want to see either an instant reaction, or you want to see the most common one, which is this. So the most common reaction we get is this. So it's not unhealthy to anticipate a second touch of a key level. Now, I wasn't anticipating this one to happen, right? However, the fact that we took out the previous week's high on Monday, right, and gave this order block, that is a reason to target at least this low. So I called for a low of the week over here. He gave us a bounce, right? So that's regarding being wrong and making money, right? So you can be wrong and you can still make some money. And it tanked, right? So when you see a rally early in the week, then it's always suspect. Nothing new. Power of three. Right? So that is the logic behind a turtle soup setup. You see this? This is a turtle soup. What happened down here? You tell me. Dumb money got wrecked because we're talking about smart versus dumb money. Every single retail book classifies this as a sell, right? At least this or a retrace, one of the two. So every single, put it this way, the majority of people were shorting here at this previous support or down here, right? Except those who know, which is buy low, right? Sell high, or don't buy high and don't sell low. All right? If that rule doesn't make you money, it'll save you money. How do you measure high and low? You measure high and low using 1, 2, and 3. As we saw, 1, 2, and 3. Right? So that is exhibition number 1, right? That is example number 1. Now, the same exact thing, because price is price and price is fractal. Remove. You guys want a break, by the way, or you guys good?
Good, man.
Yeah,
Good.
question on. I got a question on Khan Barakat. He was asking. I'm speaking in behalf of Khan Barakat. He was asking, can you explain why you used that for dealing range about 5 minutes ago when you talking about dealing range?
Okay. You mean the range I measured the fib from, right?
I think so. Yeah, it was about 5-6 minutes ago.
All right. And you mean why did I choose this low? That's his question.
Probably.
All right.
When you
I mentioned it at the beginning of the fib pull, so you should be focusing, my friend, not you, the other guy, right? So it's the swing low. Just again, it's. I feel like this kind of stuff, especially the Fibonacci pulls, they come from your own experience and tape reading, right? So the swing low that the most energetic swing low that broke the high, that broke the low, right? So that is my fib pull, personally, right? You can even choose this one if you so choose. You can go a bit lower to this one, but the one I would use is this one right here. The same way good old ICT teaches it. So, do you guys want to break right now, or do you want to continue? You tell
I'm
me.
going to continue, mate.
2-minute break.
Yep.
See, you guys are watching. Huh? I'm the one speaking. So, all right. You can have a break. You have 2 choices: a break and then example 2, or example 2 and then break.
An example 2 and then break.
I had a quick question, if you don't mind.
Tell me.
Yeah, so regarding the IPDA data ranges, I don't have much idea about them. So the 20, 40, and 60, you used
If you don't have an
20
idea
days?
about them, if you
Okay.
don't have an idea about them, then go watch month 5 core content. Right? I'm not gonna go and teach you.
All
this
right, I'll
stuff,
do that. All right.
all right? I'll teach how to frame
one-
one plot, not his stuff. Keep that in mind before asking you a question.
One
So-
quick question.
Tell me.
So then, could you have traded non-from hero using this logic?
Do you mean the
Since
rally?
Thursday,
You mean the rally
Yeah.
we had? If you were following my Twitter, then I called the low, right? Of the order block, of course, because I wasn't at the charts at the exact low. But as soon as they gave me the order block, then I called for a rally, right? Same logic. Nothing else. Previous week's low on a Thursday, right? When a higher time frame PDA, a key level is matching with Thursday, then and they give you a reaction, right? If you want some confirmation, you are entitled to it. Then price simply has no option but to reverse, right? Digging into the weekly key level for the second time. Remember the concept of touching a key level more than once. Now here's an execution tip, right? Is when you the reason people have break even. So I'm sure it's happened to you where you have a trade you enter, right? You put the stop at break even, it comes stops you at a break even, and then it rallies, right? That's happened for sure. To all of you, to every single one of you, I can guarantee it. The way you can prevent this is by healthily anticipating a second touch of a key level, right? That's how you implement that concept into your trading. You have the bare bones concept, make it yours. Feel free to go and try it out, and it's yours. Right? So, there's 5 hours of speaking, but I can go for days. So, example number 2 now. How's that sound? Good? Example number 2. Sounds good?
Sounds good, mate.
Excellent.
So,
We've been going. When do we start, by the way? 10.
about that, mate, yeah.
10, 11, 12, 10. Dang. All right, almost done. So now, again, what do you see over here? Answers are welcome.
Market structure shift. Like, yeah, a few market structure shifts bearishly.
All right. So you're expecting to sell down here, a FOMO sell, right? Or you sell
I see an
or you
old
sell-
60-day low taken.
in hindsight, it's 20 out of 20. But I'm saying, what would you see at the time?
Probably we're on the midway of the sell side of the curve of a market maker sell model.
Who are you? Let me see. Who is this? Who's
Hopium.
speaking? Hopium.
Hopium.
Right?
Yeah.
All right, Hopium. That's a nice name. You into crypto or what?
I used to follow crypto, and then I like the concept of it.
I can tell. So, what happened here, Hopium?
So what I said was I would have seen this as like the sell side of the curve has already started because we added SMT at the top at the end of February, and then we're probably on the sell side, so we're continuing down to take the original consolidation at the bottom.
All right, so a nice pattern.
And we had displacement below the low, so it's even more confirmation that we're going lower.
So be honest with yourselves, right? Now focus a bit over here. This is an important one. Be honest with yourselves, and what would you do over here at this point in time?
I probably try to short at the breaker, which is kind of at the high of that SIBI, on the daily SIBI. I'd wait for a retracement to short, basically. Yeah.
All right, very good. And any other answers? More answers?
No, if I'm being honest, sorry.
If you're being honest?
If I'm being honest, yeah, I would be bearish as hell and want to look for shorts.
Exactly. Bearish as hell, right? Equal lows,
Yep,
man. Look
correct.
at this.
Yep.
Low. God damn. So, and what else? More answers? Any different answer? Because I know that most of you were bearish on Twitter. I saw all of you, right? Not you, but people in general. Every single person was bearish down here. Right? Now, luckily, I have the remedy to that, to the sickness, which is the market structure shift, right? What's rule number one?
Rule
can't
number
hear you.
one: buy low, sell high.
All right. Before we start, I want to invite somebody to talk who is DMing me. I hope I can find you. If I can't, my friend Pip Smoke. All right, there's a few notable people over here who are astute learners and deserve to be praised. There he is. Allowed to speak. There are some others as well, but I can't see them right now. I cannot see them. So,
What's up?
what's up, buddy? How's it going?
You doing all right, you?
I'm doing good. I'm doing excellent. Here's someone else who wants to speak. Allowed to speak. Oh, this shit. So, being honest, I'm assuming you're all real traders, right? Who trade live accounts, who risk money day in, day out. Most of you, at least. So, what would your actions be down here?
You can hear me. Right?
Hopium said selling. The other guy said selling. Bearish as hell and selling. What else?
If I'm being honest, I wouldn't be bearish. I would start off with the weekly time frame and see what the bigger picture is.
I mean, it's a recommendation. Be honest with the answer. Why? Because if you don't, you won't learn, right? if you don't be honest.
I'm honest. I wouldn't.
What are you saying?
I wouldn't be bearish. Just for the fact that I choose.
I trust you that you're honest. You're the only one I can trust over here. Well, almost, and a few others, right? About the answer, because I've seen the stuff you send me on the DMs. But as a pattern trader, 99% of Twitter was bearish over here, right? How did I calculate the stat? I don't know. I just made it up, right? But everyone on Twitter was bearish down here. Why? Because of a market structure shift. The same exact logic that we saw in ES, right? Flawed logic, if I may. Now, rule number 1 is buy low, sell high, and don't buy high and don't sell low. Correct? Based on that, how do we measure high and low, my friends? How do we measure high and low? How do we measure high and low?
20, 40, 50.
Again, looking for the IPDA data range.
Yep. Number 1 is the IPDA data ranges. Number 2 is the dealing range, correct? Number 3 is the current expansion leg, right? A visual representation of the expansion we have experienced from the swing high or the swing low. All right. So measure them instead of now think about what I'm doing right now. You're changing your mind completely based on the information you have. So you were selling down here. Now, based on this measurement, which is rule number 1, always, right? IPDA, what does IPDA say? IPDA. Let's go to the data range. So you go 1, count from 20-day, lower high. Low, right? Nice silence. 40-day, lower high. Low. 20, 40. 60-day. Let's go to 60-day. So, as I said, for a short-term trade, the 20-day data range has enough liquidity within that range for a good trade, right? Short term. The deeper you go, the longer the range. The deeper backwards, deeper meaning the more back you go, the more forward you can cast. So we look back to cast forward. Data ranges, 20, 40, and 60, right? And the 60. Let's measure all of them. 20 low, 40 low, 60. Is it high or low? What do you say?
It's in a discount of the 60 range.
Very good. Very good. Excellent. So we're low by all standards. Yes or no?
Correct. Yes.
Yeah. And why? And what does rule number 1 say? Buy low, sell high. Or don't, if you're not sure, don't buy, because when you're going to apply this yourself, then you may be confused at the beginning, right? When you apply this, you'll be confused. So that's why there's a second part of the rule, which is don't buy high and don't sell low. Never buy above a high and never sell below a low, right?
Excuse me, Romeo. I'm not sure if you expanded on what number 3 actually means compared to number 2.
The expansion leg. All right, we'll see
Yes.
right now. We'll see right now. So IPDA is saying we're low, right? The data range. And what we're doing is we're measuring high and low right now. The dealing range is saying we are low. The low that broke the high, right? This one, we're actually at an OTE, right? Now, So we have 2 checks, which are enough. But the current expansion leg, meaning visually the swing high, right? Any swing high. Are we expanding to the downs? Are we visually down or up? From the most basic retail sense, are we down or up? That's what it means, right? Are we high or low right now? You tell me. From a raw, bare bones perspective, are we high or low?
Low.
Pretty low.
Exactly. Like we're running downwards below 2 lows, right? Below these 2 lows. So all 3 are measuring and telling us that we are low. And the market structure shift is telling us we're bearish. So which one do we trust? Of course, we trust the truth, which is rule number 1, right? And your mic, if you don't mind, shut it. Thank you. Now we combine these factors together with the fact that we have let me remove this. We have a swing low right over here, which was my target. Right over here. And now we've come to the part as to why it was my target. This is the juicy stuff.
Excuse me, it's Mr. Ali. Your mic is on.
See.
It's liquidity below equilibrium of the dealing range.
It is liquidity below. It's basically
Equilibrium.
but why not this one? Why did I choose this one and not this one? That's the question.
That one is above equilibrium. They both are inducements, in my opinion.
All right. They both. So could it have reversed from here? Could it have reversed from this one?
Highly unlikely, because
Why?
with trading in a range, you could trade up to equilibrium, to the middle of the range.
I mean, right now you have, if you measure, it could have come and hit the 50%, right? It could have hit this rejection block or order block and rallied, right? So turtle soup in 2 PD array. Why not?
Yeah, but probably rallied just for an OTE entry to go further deeper in the higher time frame.
What's the reason?
Range.
There's one reason, a valid reason, because see, by your logic, discount, right? It's premium. So right now, we have this. We have this low over here, and we have this order block and rejection block, right? So why can it not do this? Stops here, 50%, right? Discount, then it rallies. Why? What stops it from doing this? Fuck's sake. Why? Why this low?
As it's the first low in a discount.
No. Because of the weekly FVG. Right? So take a look at this fractal, which you all said is bearish, correct? Except Pip Smoke. I mean, logically, it's bearish. If you follow ICT like a parrot, right? High, low, higher high, lower low, shift, breaker, sell side, correct? That's the pattern trading, which is incorrect. You can't do that. Let's look at the same exact fractal on the weekly chart. Now what do you see? Are you bullish or bearish? And do you now see why I called 20,400, as opposed to only that. Now, bullish or bearish over here, down here?
Bullish.
No, clearly bullish, but
Is there any?
Bullish.
Is there a chance that you can be convinced bearish? APR.
No, if the bullish petty arrays are being respected, then no, there's no logic to be bearish here.
Liquidity, right? Liquidity purge. Not a stop hunt, a purge, right? So we have this, and we have a market structure shift. You remember what I said about the shift? It doesn't happen the way you want it to. At the beginning of the session, I had a specific drawing with a specific logic. Remember, which is when one of you, I think it was Z1 Trader, he said, "Show it to us on a chart." Right? He didn't like the drawing I was making, so I showed it to you on the chart, right? And here's another example, which is low. Everyone screams, look at the narrative and the logic and the context. Low, below a key level, 16,200. Bottoms in, right? It rallies. Bottoms in for sure, right? It purges them, flips them bearish. All right? And then it breaks the high that caused the purge. The candle, the bullish candle that caused the purge, breaker, right? And it didn't go the way you expect it to, which is simply going like this. This is retail logic. It makes no difference than any other retail trader, right? What happens is a much more psychological process, which is a low, a high, a low, a violent lower low, right? With the purpose, it's not just a pattern, it's the purpose of flipping the bias of the uninformed, right? Now, is this a candle enough to flip the bias of the uninformed? This one over here. You tell me.
Most
Is this
definitely.
candle, is this enough to flip the bias of the uninformed?
Mostly, yes.
It probably flipped off your bias too, right? As smart money, quote unquote, traders, correct? So the purge is not just random. It has a purpose. Every single price movement has a purpose and a logic. Right? Someone's getting fucked over, and someone's fucking them over. Every single one of them, right? So this is a real market structure shift where there's a high, a purge, a shift. And remember, note this down for the turtle supers out there. A real breakout never, or barely, but never allows you to participate, right? So when I'm looking for an entry, then all I'm looking for is two things. It's either turtle soup down here. If I miss it, which may happen sometimes, once in a while. If you miss turtle soup, right? Then you have an order block over here. If you miss that, then you have the OTE as a second major entry. So you'll be offered two major entry points by the market. At the beginning of any expansion leg, from the up or the down, right? You're offered two opportunities. The turtle soup and a violent retracement with the purpose of scaring everyone away, right? So you see that right here, and you'll see it all the time. It's how price books. It's how turtle soup happens. So entry one, this is another thing which I've not seen anyone talk about, but something I've noticed myself, right? Which is the sequence in which you catch the entries is entry one, turtle soup. If you miss it or you're unsure, entry two, order block FVG, stop loss turtle soup, low. And entry three is a violent retracement, OTE, whatever you want to call it, right? So we got exactly that over here. We got exactly that over here. Now, think about how different that is when you measure high and low, and you look at the higher time frame as opposed